Then we get to investments. We want to look at how much money is left over from our savings that we can pile into investments. We've got our investments. Now, where do we want to fund? Do we want to fund our longer term investments in terms of super? Do we want to fund our shorter term investments that are held personally? Well, it really depends on whether we want to access those funds before retirement, which would mean our personal investments have to be looked at, or whether we're looking to build up for superannuation for our retirement. Now, superannuation is a great tax vehicle, so we want to utilise super as much as possible. So coming up with a balance between our non-super investments and our super investments is key. And we want to maximise some of the tax benefits that are around getting money into super toward around those limits that the government sets, and then look at investing the rest outside of that environment. So again, we want to look at utilising some pre-tax contributions, which will reduce the amount of tax we pay, and maybe also some after-tax contributions if we need to bump up our super. And then looking at investing some funds through to personal investment. Now, personal investment could be shares, could be a property, could be all sorts of things, and that's a topic for another video or another series of videos going forward. I've also got a circle here for entity, and the question here is, do we have a family trust, a business, an entity, a company, whatever it may be, another entity from which in which to hold assets, and we've got to look at factoring that into if that's in a particular scenario, or if we've got objectives around something like that. So there we've got our wealth plan. We've got our income, we reduce our leakages, being tax and expenditure, we build up some savings, so we've got some available cash for rainy days or particular expenses in the short term, such as holidays. Then we've got our debt reduction. We really want to be jumping into reducing our mortgage over time, because we just don't know what interest rates and the economy and our jobs are going to be like over the next 10, 15, 20, 30 years. Remembering that a home loan is a 30-year debt and commitment. We've got some investment debt that we've got to manage and look at the cash flows around that. Ideally, we want to be in a scenario where we're not negatively geared, especially with some of the changes that the politicians are talking about around negative gearing. And then we've got our investments. We want to come up with a balance between our super, our long-term investment, and our medium-term investments in terms of our personal investments. Now, they might be 3 years, 5 years, 10 years, 15-year investments, depending on what type of investments they are. Do we look at entities and different vehicles that we can potentially generate some protection of our asset base or some tax reduction? And that's something that we want to look at as well.